looking at prepaids and tabular statements. So we have an example of a company, and this company paid $6,000 for annual insurance up to the 1st of the 4th, 2001. Opening prepaid is $360. So, well, the bank figure should be straightforward enough. We paid money, so I'm going to have a minus $6,000 in my bank account. That's easy enough. Okay. The insurance expense. So I need to work out my insurance expense. So I'm just going to move this one down to give ourselves plenty of room for this one, because we have two different questions here. So the insurance expense, well, how much did I use up this year? Well, I used up my opening prepaid. So that's going to be taken out of the asset account because it's going to be used up during this year. So I'm going to minus 360 from the opening prepaid at the beginning of the year, and I'm going to transfer it to my profit and loss. And that's going to be another expense. So that asset is going to go down by 360. So my expense is going to go down by 360, which means, it means my expense goes up, which means I have less profit. So my profit and loss balance is going to go down by 360 as I use up that 360 that I had at the beginning of the year. And then plus I need to add in here the amount of the $6,000 that we used up this year, and whatever else was left over is going to be brought forward to next year as the insurance prepaid. Okay. So we have to separate that. So we have 6,000, and how do we separate it? We need to work this out based on number of months. So the insurance expense is going to be, now if I just put this down the bottom, okay, it's for the annual insurance up to the 1st of the 4th, 21. We're doing this for the financial year ending the end of December 2020. Okay, so that means we're going to have 9 months used of the check. 9 months is going to be used, and the remaining 9 from 12 is 3 months is going to be prepaid. So we go to our check is 6,000, okay. 9 months of 6,000, 9/12 of 6,000 is going to be 4,500. So that means 4140 is going to be, oh sorry, I put that in the wrong place. Just quickly go back to that again. Okay, this is the amount used. 4,500. We said we put that there. Okay, and remember this is an expense. So because expense is going to reduce our profit, so that's going to be taken away as another minus. So that means the net effect is 4,860. That's the amount we've actually used up. We're trying to separate the amount we've paid from the amount we've used up. Okay, with this one. So we're going to have a minus 4,860 in our profit and loss reserve. Our bank is going to have a minus 600. So that means that you should work out in your head, because we know after the same net effect on assets and liabilities, that there has to be just over 1,000 is going to have to go into the assets to compensate for this. So the insurance prepaid, we reduce that by 360, and we're going to add on the 3 months prepaid for next year. 3 months of 6,000 is 3/12 of 6,000, which is 1,500. So that means that 1140 is the figure that's going to be prepaid for next year. So our assets are going to have 1140 in them. And when I finish at the end of the year, my closing figure is going to have 1,500. That's the new figure for insurance prepaid. And in this month, when we do the transaction, we're going to have plus 1140, which is increasing the opening figure from 360 up to the new figure of 1,500. So we'll have 1140 is going to be the figure that's going to appear in plus insurance prepaid. In the profit and loss balance, we're going to have 4,860. That's the figure that's going to appear in as a minus in the profit and loss reserve, and our bank will have a minus 6,000. If we go and look at credit transfer, which is the opposite because we're receiving money, so bank, we'll have us getting receiving money, so 9,000. Okay, rent receivable income, so I need to work that out. I need to separate that in the same way as I did before. So the income is going to be the prepaid we had at the beginning, because that has been used up now. So we're going to take that out of prepaid. I'm going to transfer that into income. That's a plus figure in income. So 2,480. So that's what we had at the beginning. Plus we're going to have the proportion of the check that we received that we've actually used. Okay, so it's 9,000 covering 6 months, finishing 28th of the 2nd. So that means it's going to finish 2 months into next year, which means we must have 4 months of this year. Oh, that's 4 months now of the check. Okay, so the check is 9,000 divided by 6 means 1,500 a month. So 4 months is going to be 6,000. Is going to be of the 9,000, 6,000 is going to be used up this year. So that means 8,480 is the amount of the income. It's going to be a plus in the profit and loss reserve. We're getting money. And the rate prepaid, well, it starts off as 2,480. So I'm going to take that out, cancel that, because that's actually been used and that's been transferred from there and put into there as an income. We don't have a prepaid anymore. We've used it as become part of our income, even though the money never came in this year, it came in last year. And the 2 months or 2/6 of the check of 9 grand is the amount that we've prepaid for this year. So that's 3 grand. So the new figure for rent receivable prepaid, which is going to go on the closing balance sheet. So this is the right hand column, the very last column. We've added everything up. It's going to be 3 grand. We started off with a figure of 2,480 and we're adding 520 on. So this 520 is the figure that will appear in this month's transactions, okay, to bring us up to a closing figure of 3 grand. Our income, profit and loss reserve, is going to be plus 8,480, and we'll have in the assets we'll have a plus of 9 grand, and that's where everything adds up. These two here are going to be liabilities, the 8,480 and the 520, and bank is a plus in the assets.